Welcome back, everyone, to another episode of Paradisos, where if you change your thoughts, you can change the world. That is right. That is right. My name is Dennis, for those of you joining us for the first time. And today we have a very special guest introducing here for Paradisos for our series, our new series we introduced a few weeks ago for Trading Thursdays. I hope you guys are enjoying it. We have a lot more traders coming. Shout out to trading experts, man. None of them would be here if it wasn't for them. So please, everyone, welcome Philippe Neiman.
Thank you, Dennis. I appreciate it. Thanks for having me on here.
For sure. All right, so I mean, let's just jump right in. We have a lot of stuff to talk about. Trading being one, and one very special thing that I'm pretty excited to be talking about. I'm not going to mention it, but I mean, let's just jump right in. Can you tell us what first got you interested in the market?
Yeah. So actually, I would say money. Everybody's
like most.
Yes, the main reason people get into finance or any type of trading in the beginning. I started as a finance major in college, and I was working at FTI, so Franklin Templeton Investments, for a little while here, and I was mostly just spreading comps and doing kind of busy work for them in the private equity desk. But I got into specifically the trading world because one of the basically one of the CFAs there, one of the main guys, was trading options on his it's kind of like a side thing,
right.
And I got really interested in it based on seeing his performance and seeing how professional he was doing it, and I got interested in it, and then obviously I knew nothing back then. I was very dumb kind of kid in terms of the trading world, and I did make a lot of mistakes, but I joined Trading Experts about a year later after making many mistakes, but they really helped me definitely grow into hopefully what I can call myself a professional trader today. So
nice. So can you remember your first trade, and if so, can you tell us a little bit about it?
Yeah, so my first trade was something that Dollar Bill would call an "I'm not uncertain" trade, or definitely a prom night promise. So if anybody knows what I'm referring to, it is just the tip. Yeah. So what I mean by that is I was talking to some of the directors at this company called CBay, and basically, they were discussing how excited they were about getting their new product launched and approved by the FDA.
Okay.
And I'm looking at this, and it was, in my opinion, a cheap stock for $1, about $1, $1.50 or something like that, in early 2016. And I was, it caught my attention. I was like, oh my God, I can afford this stock, right? So I bought about, I'd say, $200-$300 worth of a share, and I was just like, oh, let's see what happens here. And based on what they had told me now, I did nothing illegal. I didn't have any insider information or anything like that. It was, kind of an information type of trade, and I took that at about $1, $1.60 or something like that, and held it for about 6 months, and then it hit like $4 to $5. So that got me hooked like you couldn't imagine, because quadrupling your money or tripling your money in that short period of time is mostly some people's dreams there, but obviously it's not a get rich quick kind of gig, and I learned that very quickly with my next trades.
So wait, before you continue, so sorry to interrupt, yes. But it's just like
no,
the fact that you were just starting to trade. How did you have the patience to even hold it for 5 to 6 months? Usually when people even see it just move a smidge, they'll sell it right away and then not expect it to keep moving. So how did you know to have that patience to hold it for that long?
Well, that's a good question. Basically, like I said, I was working on a P desk at an investment firm, and most of our clients are holding positions for years. And in my opinion, like, I'm investing in this, seeing where it can go, right? And the fact that it was $1.60 for me was like, oh, low risk, right? But little did you know, that can bite you in the butt a little bit later on. So I bought that cheap, and I was like, I'm going to hold it, see what happens here. It went up. I got excited. I had also brought a couple friends with me on this trade. I was like, oh, invest in this, it'll be good. We were all holding it, all kind of like discussing, should we sell here? I'm like, no, let's just wait until a little bit, So we waited until about $4 or $5, and I remember selling around there. Now today, actually went to like $13. Ended up going to there, but whatever. I could not have known or did not have the knowledge to be able to, or the skill to be able to trail a stop or move a position to see it grow. And definitely would not take a trade like that again today.
Right. So how did you come across trading experts?
Good question. So actually, I was just scouting social media, not investing. I was following a bunch of investment profiles, and all of a sudden get this thing about trading experts, and they had a lot more followers than all the other like guru finance guys on there on Instagram. So followed them, and then they posted a trade on their like a chart, right? And it was the first time as I was kind of using chart patterns to trade,
right?
And that ticker caught my attention, and ticker is the name of the stock, right? So I punched it into my little Robinhood account, plugged it in, bought a few shares, and that thing went up. And I was like, all right, these guys are gods. I gotta start following them. So I started following them, and then they posted a story that said, on their Instagram, and said, okay, well, you can come follow us and join the group chat. So I joined the Getting Started group chat. Started very what Ben calls and Shake called dumb money, right? I was working in the investment world in the beginning. I honestly thought I knew a lot. Little did I know I did not. So there's a huge difference between in analysis in the financial markets and actually trading. And the main difference is the psychology and about that. So I learned.
Go ahead. What was that?
Through them basically being able to control your emotions with trades. And
so how's your experience been with trading experts? Ben being the hard ass that we know he is, and Shake just always busting out crazy information and crazy shakedowns. How's your experience been throughout?
So when I first started with trading experts, it was difficult for me to not be like, oh, I know this, I can do this. And then Ben actually, shut me down a couple of times. He was like, no, you don't know shit. You gotta calm down here, boy. So, and Ben is kind of the hard ass, he's tough love a little bit, and he likes to, make sure that people understand. And actually it's a great thing. And back then maybe I was like, oh, who's this guy think he is, but it's actually the best way to teach in this situation, because a lot of people think they know a lot about the market when they get in, and they don't know anything. And it's very, and the way people trade is different, and they trade on a very specific way that is generally extremely profitable for people that want to invest and want to build a financial future. And Ben is just trying to help. He's just trying to make sure that people don't give up on that. And if you do give up, it's because you're going to find excuses in the future not to do so.
Right.
And that's his way of being like, you want to learn or you don't, right? So get on board or don't. And I think that's an excellent way to get people started and get people stick and actually make a future out of this, or build their financial future like they want to. So it's a great way. Shake is, on the other hand, is more like, yeah, go ahead.
No, go ahead.
Okay, so Shake is on the other end is more like a softie. He's just funny. He's he tries to be nice to new guys, and it's great too. It makes it the process a little bit easier. You got a bad cop, good cop kind of thing going on here. So
and what I love is that you're going in expecting like to learn, which you are, but it's like you get Shake, the nice guy. Hey, what's up, man? And like Ben, like you're like, oh, happy, oh, cool, this is a nice program, and then Ben was like, yo, what you doing? Like. No complaining. Let's go. Get your act together. Let's get this shit done. And you're like, oh, okay, all right.
Exactly.
It's like your emotions are all over the place.
Exactly.
So
exactly, it's that tough love, soft love kind of relationship they have going, and I think it's great.
Absolutely. So, how did you get into the hedge fund industry?
Okay, so wow, that's a long story. So basically, I was looking to take my trading to the next level. And I made a lot of mistakes doing that as well before I joined the hedge fund, and I actually started a real career in this. But I joined what we call a prop firm, okay? And actually, I think Ben and Chick had a similar experience I did. They specifically told me not to do this.
And it's crazy that you mentioned it, because I was literally just about to ask you after this question, you know.
Consistent with my trades with trading experts on my own account.
Sorry, the connection was a little bad, but like I was saying, that it's crazy that you mentioned it, because I was literally just about to ask you, you know, that you worked in the same prop firm as them when they told you not to. So go ahead.
Yes. So I did not know that they worked for the actual same prop firm. All I knew was that they had worked in a type of shop like this, and I trades and consistency mostly on my own account. Little did I know that an extremely leveraged account is risky and dangerous, and it's not about making 100 grand in a few days. It's about surviving, and I learned that mostly from that experience. But I could say, oh, it was a bad decision, and I could kind of crutch myself with this. Mm-hmm. But at the same time, it gave me an immense opportunity that I definitely don't regret making that decision today. Or a prop trading desk, I do not recommend it unless you see specific profitable trades, and a leveraged account is not a good way to go. You're basically borrowing money to increase the amount of buying power you have with very little risk that you can take because of an initial contribution that you have to make. Right. If you make that initial contribution and lose it, you're done. So very, very risky way to go. The only reason I got to get out of this situation and make a career out of it was because one of a very successful hedge fund manager. The guy I met there basically was seeing that I was one of the only guys actually making a living out of this, and he recruited me out and said, we're moving out. Basically, this kid was there because his father wanted him to gain some experience in the trading world, and after he got out, they basically brought me in, and I've been trading for them since. So, and it's been more like a career thing more than a let's get rich quick kind of deal.
So you basically, like, while working at the prop firm, you basically leveraged it to get a job at a hedge fund.
That's exactly right. So using that experience and using the fact that I was consistent with my trades, being able to survive, basically, because that's the only thing that matters in a prop shop, is being able to survive. It's not about making money. If you think you're going to get rich quick or make a living off of prop trading, you're probably dead wrong, unless you're some kind of very, very experienced trader, professional. So I use that experience to be able to get a real job.
All right. So sorry if I'm a little delayed, but it's just the connection. But
it's okay.
We'll work with it. So what are some fears? What are some of your fears when you first started trading?
My fears I'd say, like, when I look back at the first trades I made, the one we talked about, I didn't really have any specific fears. Obviously losing money sucks, right. But I was seeing, like I said, I was seeing it more like an investment than like, oh no, I'm losing $5, right? Because I only put a couple $100 into it. Right. When I started, adding more funds, it did get a little bit more stressful. It helped me out to separate money from my emotions, because you have to run this like a business. If you're going to trade, it has to be a business. You have to be emotionally detached from each trade. It is a get in. If it works out, great. Follow the game plan, get out. If it doesn't, if you're wrong, get out. It's not about, oh my God, I lost this much, I have to make it back or anything like that. It really is about being able to control your emotions. So I think the fear part of it was not as impactful as maybe some other traders have, because I was with the trading experts group.
And do you have any fears now, more or less?
Since it's not my money anymore, it's not as fearful, other than maybe my job. But basically, Yeah, I mean, obviously you're playing with client money, you're playing with other people's money now. It's people's life savings. It's different, but the psychology stays the same, right? Even if whether you're playing with $10,000 or you're trading with 2 billion, it comes to the same kind of situation. It's just a percentage game, and it's surviving.
So it basically doesn't entail fear. It's more about growing and being mentally more strong than you were before. Whether it's like you said with 10,000 or with $2 million, whether it's yours or with client money.
Exactly. If you start off with 10,000 and you're fearful, you have too much money. If you're fine with $10,000 and you're doing good, and then all of a sudden you end up with $100,000 account and you start being fearful, you're trading too much money. For your own psychology, you have to be able to detach yourself completely from that.
And that's what I think people need to understand when it comes to trading, that you not only have to be humble about what you have, but you also have to understand that the mentality of trading with 10,000 versus 100,000 should always be the same. The philosophy, the game plan should always be the exact same way.
Exactly. It shouldn't change at all. Your mentality should remain the same whether you're playing with $500 or $500,000. I know it sounds percentage, it doesn't matter in the end.
So were you more greedy in the beginning or were you more patient?
Definitely more greedy. In the first trades I was making, I didn't know what I was doing, so I was investing, right? I was thinking, long-term investment. I would say more patient. But then when I actually started actively trading these, my account basically, and these multiple trades a week, I was taking money way too quickly. I was being greedy, and because I wanted to basically, you're like, I lost $50 today, I'm going to try to make 100 today, the next day. So that mentality kind of steps in, and you have to also be able to detach yourself from that. You have to be able to say, okay, well, this was my original game plan. I'm sticking to it. Mm-hmm. If it doesn't work in my favor, and most of the time it won't.
Right.
But you have to be able to stick to that.
So what has helped you be more patient with your winners?
I mean, following the game plan is definitely the number one thing. You have to have a set of rules. If you don't, you're basically shooting yourself in the foot. You're basically acting on your own emotions, whether having a written down game plan. If you're gambling, right? Because if you don't have a game plan, it's the rolling dice, and we're not a casino here. This is your money that you want to invest, that you worked hard for. It would be stupid to just gamble it away and not have a game plan.
Exactly. So, what are one of your best trades? Well, till this day, would you consider one of your best trades?
Are we talking percentage wise, or are we talking dollar amount here?
Let's do dollar amount.
Because I'm telling you, man, nothing can beat that one trade. That one was, but that dollar, that 4 times, the amount here. But again, the only reason that worked out is probably because of information. I would not recommend anyone taking anything under $30. You're basically buying shit that nobody wants, right? So don't buy stocks below a certain amount of money. Expensive stock get more expensive. Cheap stocks get cheaper. So,
that's the model.
That's the model. So in terms of dollar amount, Amazon was a big winner for me. I was able to get in and get out of Amazon multiple times, especially this year with their extreme growth. Speaking of which, I actually just got stopped out of Amazon today and booked quite a good amount. And it's funny to think like you got stopped out and you're happy about it, but
yeah.
I had my game plan. My stop was set below that level. I had moved my stop from my entry, and I was able to book a pretty significant amount of profit on that. So, dollar amount, being able to $1,200,000 on an after, I used to, rewind like a year and a half ago, I was trading a $25,000 account. So it was a huge move for me.
So it's great that you mentioned being happy that you got stopped out. How long did it take you for you to understand to trust your game plan, and then the game plan working, but knowing that it could have gotten, it could have been better. The situation could have been better. Your trade could have been better if you weren't really stopped out. Like how long did that take you to really understand that?
Yeah, so being able to understand, and it comes back to being able to separate yourself from the emotions, right? And sticking to the game plan. And the reason I was able to do so is I have to give shout outs to trading experts for this, Ben and Sheikh here, being able to show me that this is a business. This is, you set your game plan up, you get out. You need to be happy when your trades work out, not basically be counting pennies. Stuff you're going to get out.
Awesome. So I want to sort of like switch topics a little bit. And I mentioned in the beginning that we were going to not only speak about trading, but something else. And I'm kind of excited about this. So let's get a little bit into watches. I know you're I know you're a really big watch guy. Ben told me a little bit about you and your watches. So so he said you flip Rolexes somehow. So I mean, let's get into a little bit of that.
For sure. So I first started flipping watches. I was this was back in college. I was bartending at this bar, and this guy walks up, and I've always admired Rolex watches. I've liked them. I just didn't know anything about them. This guy walks up to the bar, puts down his keys on the counter, and he walks up and he's got this beautiful solid gold Submariner, and today I know it's a 1680 in a yellow gold and with a blue dial, and it's a very rare vintage watch. But I recognize that it was nice. And to this day, this guy is one of my best friends. Shout out to JT. But basically, we started flipping Rolex watches. From there on, he befriended me, and he became sort of like a mentor to me. And the first watch I flipped was a 1675 Rolex GMT in Pepsi dial, so Pepsi bezel. I'm not sure if everybody knows what those are, but they're basically the GMT from Rolex from about the 1970s, early 1970s. So I got into vintage Rolex first. But basically being able to see the value in something that's so beautiful and has so much history, and being able to turn it around and make some money on it is just a great thing.
Dang, that's amazing. So where do you really see the luxury watch industry going in the future?
It's a tough question, because that's like speculation, prediction, right? Right now, a lot of people are thinking, like there's a huge bubble going on, right, in the watch brands like Rolex or Patek Philippe or Richard Mille. And these brands obviously have a marketing goal here to decrease production and increase, and basically by increasing demand and increasing prices. I don't know if it's going to be, this bubble is going to end, but as long as people still want the watches, and as long as there's not a lot in the market out there, it's going to remain that way. So I think it was a great thing that Rolex and these other companies did, was basically lower that supply and making it a prestigious thing, right, by increasing those prices. And it's kind of a crazy thing. You'd think, well, if the price increases, then that decreases demand, right? It's actually the opposite in this case, because it is a luxury item. So it's about status and being able to kind of show it off.
Jeez. And I mean, before I continue, I just love the fact that you keep answering my question, but sort of mentioning what my next question is going to entail, which is awesome. So you mentioned bubble, and you might have explained it, but it got cut off a little. So what does bubble mean in the luxury watch industry?
Well, in any type of industry, even the market, we could have said that the Bitcoin, there was a bubble, right? There was a tulip bubble back in the 1800s or 1600s, something like that. There was a .com bubble. Bubbles are basically an increase in demand that is kind of super massive, right? And then not realizing that there's actually no value, right? Because a bubble ends up bursting all the time. And if it does burst, then everybody ends up with valueless stuff, okay? I don't think necessarily the watch industry is in a bubble. I think it's more so about being able to see how many people actually have watches and don't. If all of a sudden you find yourself and everybody around you starts wearing Rolex watches or has Rolex watches or has Richard Mille, then yeah, it might be a bubble, right? It's about supply demand.
And like I said, it's great that you keep mentioning certain things that lead to my next question. So is Richard Mille watches in a bubble right now?
I'm sorry?
So the question was that is the Richard Mille's watches in a bubble right now?
Oh, okay. I'm not a huge Richard Mille fan, but Richard, I have to give it to them. Richard Mille makes very unique and exceptional movements.
And I'm sorry to interrupt. I just love how I just butchered the heck out of that name.
You're fine. Richard Mille, yeah. So basically, Richard Mille was one of the first, I'd say, increase the prices of the watch by like 40-50% and decrease production by like 70%. That was kind of crazy and unforeseen before, but now today everybody thinks these watches are like these amazing unlimited, they're all limited edition watches, right? And what that designer did was kind of a groundbreaking thing. Is Richard Mille a bubble? Here's what I think. Walk around and see everybody wearing them, then obviously everybody has them, right? So maybe everybody has a bunch of useless stuff, except that not everybody has a Richard Mille. And the best way to kind of see that is if you go to like a trade show, and you notice just the dealers there, right, that are kind of showcasing their watches, and you just see a bunch of Richard Mille in their boxes, and every dealer seems to have Richard Mille, and nobody walking around has them, then you know that you can deduct from that through the dealers, and no consumers actually. That's not the case. Right now, people that actually can get their hands on them are keeping them, which is making it, because they love them, making it very difficult for other people to get them. And because they only make about 30 models every time they come out with one, it makes it very hard, for the world. So it makes it very hard to get one, which is why I don't think necessarily it's a bubble. Like I said earlier, it is a status thing. Bubbles are not necessarily oh my God, I have 2,000. That's not necessarily a status thing, whereas at Richard Mille, the fact that you paid that price is some sort of a status. So I think they're not necessarily in a bubble until you start seeing a bunch of dealers having them and nobody wearing them anymore.
So, I mean, now that you mention it and sort of explain that, couldn't just like any old schmo or any average Joe create a watch company, right? Make it look like a beautiful watch, only create 20 of them, each model, like how Richard Mille does, and sell them for $15,000-$20,000 each, and then be successful and never be in a bubble in a way?
Well, actually, Richard Mille starts around $70,000, and they range from about, usually they should go second market starting about $150,000 to about $2 million. So yeah, that sounds a little crazy, right? But the thing is that those people the people that can buy those can afford them, and they can afford to keep them, not necessarily resell them, because they want to keep them. So it's I know it sounds a little crazy to be able to say like, well, that's not a bubble, but until that happens, it's not going to be in a bubble, because you would be lucky to find maybe 10 Richard Mille in a trade show right now with 250 plus dealers, and they're rare, right? They're hard to get, they're rare, they're expensive, and they have status. And you see someone wearing one, you notice it. I was actually at the Equinox gym here in on Fifth Avenue earlier this week, and I saw one of these guys wearing one, and I said, "Nice watch," and he was like, "Thank you." And he's like, "I actually get a lot of compliments about it." So I was like, "Well, obviously, it's a Hishtamine. It's worth about." That sounds crazy. These can afford it.
So again, I mean, can't just anyone create like a luxury watch brand, only create 10 of them, sell them for a ridiculously amount, and then be considered a luxurious brand and never be in a bubble?
They can, but like in a sense, they make such unique pieces and they make them quality and people like that status. Technically, yeah, they could. They could basically, a watchmaker could start making those watches, making them look cool, and obviously increase. It worked for Nishan. Who knows?
I mean, it's definitely easier said than done, but I mean, hey, anything is possible in life, right?
You have to be a watchmaker to start with that.
All right. So, how do you spot a good deal?
Ooh, that's a good question. Knowing your stuff. Definitely before you buy a watch, educate yourself on the watch that you're buying, on the model, on its history, its previous models, if it does have previous models. Any specifics about that? Usually, a watch that a good deal on a watch would be something that's below its average market price, but you have to make sure that you're not getting scammed, right? It's not a fake, or it's not, it's not extremely damaged, or it has some faults in it, right? So you have to really know your stuff. So make sure you educate yourself if you're going to buy a watch. People, listeners out there. But for myself, I just do my research. I just look them up and I shop. I take my time. I'm not in a hurry to buy anything. So when I do look at him, and I use the internet for, if I have time, hours, and look at different types of watches, and sometimes I have a specific one I'm looking for. But if I can find something that I think is below market price, I can try to negotiate on it, get a good deal. But you're never going to find, in the luxury watch industry, you're never going to really find a great deal. It's always going to be about margin. It's always going to be about who's the seller. Can I try to negotiate a price a little bit lower based on some leverage from myself? And who can I find that's going to buy this watch I'm going to make a profit on it, right?
I mean, and correct me if I'm wrong. I mean, it kind of sounds like you can use that same sort of, in a way, you could use that same information in trading, right? Trying to find a good deal, trying to find good stocks and stuff like that.
In a sense, yeah. I mean, we always try to say, and Ben will repeat this over and over, don't try to find cheap stocks at a discount. Right. Because if they're at a discount, it's because nobody. You want to be able to buy it technically high, right? Just like a luxury watch brand, you're buying this high, right? And being able to sell it higher. That's kind of the point here. And yeah, it's sort of like trading, and everything in life is kind of like trading in a sense. You can kind of always wrap that around because it is very psychological and very, a very psychological game.
I mean, in other words, I think everyone should get into trading to be able to be better human beings. I mean, why not, right?
I agree. It kind of shows, especially in our capitalist society, it's the perfect competition. Stock trading is the perfect competition. It's about who survives, who doesn't. It's who eats who for breakfast, right? So, and I think everybody should be financially savvy and be able to be financially literate. That's super important. I mean, the fact that we don't even learn how to do our taxes when we're in high school, but we learn about the mitochondria is the powerhouse of the cell, sounds insane to me, right? So,
my man is preaching right now, man.
And I think that's what Ben and Chick are trying to do with trading experts, and I think it's a great thing.
So, what has been your worst flip ever till this day?
There is no worst flip. You know why? Because you get even if you don't for a long period of time. So I can't answer that question, man.
I'm sorry. Could you actually repeat it? Because it got cut off, and I think that was actually.
Oh yeah, no problem. So
you said there's no such thing as worst flip.
There's no such thing as a bad flip, because worst case scenario, if you don't find a buyer to buy your watch, you get to wear a really cool piece for a few months or years. So I can't answer that question.
Bingo. What has been your best flip?
My best flip. I think it was like 1680. With a it was a Submariner Red Meters First. I think we got that watch for about $14,000 or 16,000. Sold for about 25,000. Based on the fact that it was a kind of an unknown deal. And today it's going to be impossible to do this, but like 4 years ago, the vintage watch industry was not what it was today. That sounds crazy because it's only 4 years, but there was a huge impulse in buying in the last 2 to 3 years.
So in other words, you got in just at the right time.
Yeah, we got it at the right time, I believe. Yeah, we definitely did, and we knew what we were looking for. We had a buyer already, so it was easy to make that trade.
So how do you go about, buying these watches, and where do you sell them, and all those things?
Mostly looking for them will require you to be part of forums, being able to look at forums, and you look at forums, keep browsing through them. Like I said, keep doing your research. Don't buy them from like other dealers. You're not going to get a good price because they're already taking that margin, right? But dealers can offer other perks like a nice experience. An authorized dealer from Rolex will offer you a good experience, and it's nice to have that little perk. But how I look for them, I go on forums. I look on sometimes even eBay. Sounds crazy a little because sometimes these watches can be fake. But if you know what you're looking for and you know your stuff, you'll be fine. Just make sure you do your due diligence here. But basically, I look on forums, look on eBay, and to find my buyer, I just post it back on the same kind of forums and same kind of platforms.
So before we close out, 2 more questions. What's the quickest way, because I'm sure people are wondering, what's the quickest way to spot a Rolex fake without it being in front of you? Is there a way? Like without being able to touch it and turn the dials and such?
Yeah, absolutely. I think I can spot a fake in a few seconds just by looking at it, based on the fact that I look at them a lot. The main one I'd say is how the watch ticks. A Rolex has sweeping hands, and it's a very distinguishable sweeping hand, and it is a very smooth sweeping hand. If it kind of lags or it ticks like a watch that you put a battery in, obviously it's going to be a fake. Although some vintage Rolex watches do have a little bit sometimes of a delay or a hiccup in the sweeping hand. Difficult. Also a pretty distinguishable watch, whereas most of the fake watches you see today are modern style Rolex watches, so or copies, right? So the other way to look at it is simply the font, being able to tell whether there's an issue with the sizing or it doesn't look right. Sometimes it's just about, it doesn't look right. It doesn't look perfect. These watches are ultra high-end luxury watches. They are perfect. There's usually nothing wrong with them, even under the microscope. They're extremely precise.
So in other words, they're more flawless than diamonds sometimes.
I don't know. They're basically almost flawless, and that's why they take so long to make. Why they're so sought after. So if you see a Rolex watch, it doesn't sound right. It doesn't look right. It doesn't feel right in your hands, even if you did touch it. So if the weight's not right, those are the telltale signs. I like to look at the bezel itself. Usually it's going to be a little wider, a little too small, or it's not going to make sense, or even the shape of the watch or the size is important too.
And like you said before, and with anything in life, whether it be watches, whether it be trading, whether it be anything you want to learn, the only way to know about it is to actually go out there and do your research and find the knowledge and such.
Learn about it. Learn about your stuff before you start playing. You have to learn before you play, or you can just try it out and learn on your own. But I think that's going to be a lot more expensive than learning from someone who knows what they're doing.
Exactly. So before I ask my last two questions, I'm sure you know this, but I mean, be honest if you don't. When I was in college a few years ago, I was in a public speaking class, and we had to give a research paper. I'm sure everyone goes through it if they have a public speaking class. where it's basically a topic and you have to do a bunch of research and then perform it and present it to the class. And I think the only one I remember that day, I don't even remember what I wrote about, but there was this guy wrote about Rolexes. And the only thing I remember he spoke about, or he said about Rolexes, that the creator, and I'm assuming it's true because he said it and he had information backed up from it. And the only thing I remember was him saying that the creator, the inventor of Rolex, the way he got the name, though, the way he thought of the name was he thought of Rolex to be able to say the word Rolex the same exact way in every single language.
That is 100% correct.
Hey.
it sounded right. It sounds right, and it sounds good in every single language. That was, yep. He tried many different names. He tried Rolco. He tried a lot of other names, but Rolex stuck because it sounded nice. It rolled well on the tongue in every language.
Awesome. All right, so. Last two questions. Favorite watch ever?
Ever. Okay, so I have my holy grail, which is it's a Paul Newman 6241 in yellow gold. It's a Rolex. Okay?
Yeah. I'll post a picture somewhere here.
It's a Rolex Daytona 6241 in yellow gold. It's absolutely gorgeous. It goes for about $250,000 to $500,000.
Man, it sounds gorgeous just from that price.
I know, it's crazy. Not going to buy this today, obviously, but another watch that I really, really enjoy seeing, and they're super rare. I've only seen them a few times in my life. What is the Submariner 1680 in red Submariner? So it is basically a Submariner, but it says the Submariner writing is in bright red. And it's from the early 70s. So it's an absolutely beautiful watch. And that will probably be my next one to keep. So. All
right. So to close out, any advice that you have for, young people, whether it be in life, whether it be in trading, to just, help them keep their head up whenever they're, they fear they're failing or they're trying to overcome something?
I would say ask for help. The number one thing that got me kind of where I am today, or helped me get there, is not being afraid to ask for help. Learn from someone that has been there through it. Most people will be glad to show you. And sometimes I have kids on Instagram asking me stuff, and I respond all the time. I think it's great if you can learn from a mentor that can teach you the ways. And they know what they're doing, right? It's a great tool, and don't be afraid to ask. Most people are afraid to ask for pride, or they're like, oh, I can do it on my own. I'm a self-made man. Nobody's a self-made man. Everybody learned from someone, right? So make sure you learn from someone. I think that's the main point here. I did that with trading experts, and I did that with watches.
And I think that's just so key when it comes to life, whether it be your career, business, having that right mentor and being confident enough and brave enough to look for that mentor and then act to be mentored by that person.
Absolutely. And it's difficult sometimes. You're right. Sometimes it's a pride thing, right? But ask for help. You're going to get it most of the time.
Awesome. Philippe, thank you, bro, so much for all this knowledge that you dropped on everybody on trading and on watches, man. I just want to have a beer one day with you now that I know you live in New York, and just
we catch a beer, man. Anytime.
talk more about watches. So again, thank you, man. I really appreciate you hopping on.
Thank you for having me here. I had a great time. Thank you so much, Dennis.
Awesome. And for everyone out there, be ready, guys. There's going to be a lot more trading Thursdays, a lot more traders talking about it. And if you guys missed our last episode, check our website out, www.paradisos.world. Check out our Instagram, Paradisos Podcast. Check out our Twitter, Paradisos 101. And until next time, God bless you all, my beautiful people. Good night.
Running my race till I'm one of the all-time greats. Skate, running my race till I'm one of the all-time greats. Wait, running my race till I'm one of the all-time